There's a new climate rule out there that's quietly but completely reshaping the world. It's called the Carbon Border Adjustment Mechanism, or CBAM. Now, I know it sounds super technical, like some boring trade policy, but its real power, it isn't at the border. It's in the boardrooms and investment committees that decide where billions and billions of dollars are going to flow. So let's break down how this one rule is basically redrawing the entire map of global investment.
You know, this quote right here, it really gets to the heart of it. For so long, we all knew the rules of the game, right? Capital, money, it just chased the cheapest place to make things. Simple. But that entire logic, that whole equation, is now being fundamentally rewritten. So what was that old playbook anyway?
Well, for decades, it was pretty simple. Money flowed to wherever production was cheapest. And yeah, that meant chasing low labor costs, for sure. But it also meant chasing weak environmental rules. Emissions were treated as what economists call an externality, which is basically a fancy way of saying it was someone else's problem that the atmosphere could just absorb for free.
The official term for this whole strategy is cost arbitrage, and this is the principle that built our modern supply chains. Companies got really good at playing the differences in costs between countries, and a huge part of that cost difference was the ability to pollute without ever paying for it. That offered a massive structural advantage.
Okay, so this is where CBAM steps in. It's literally designed to close that loophole, to end the free pass on pollution. It essentially says, look, if you want to sell your products here in the EU, you have to account for the carbon you emitted to make them. It takes that invisible externality and turns it into a very real expense on the balance sheet.
So here's the crucial point. CBAM levels the playing field. A ton of steel that's made in a country with no carbon price is going to face a charge at the EU border. And that makes its final cost pretty similar to a ton of steel made inside the EU that already paid a carbon price. And just like that, the arbitrage opportunity, it vanishes.
But if you're thinking, okay, so it's just another tariff, you're missing the real story here. The true impact of CBAM isn't really about trade flows. It's about capital flows. Its real power is so much more subtle. And believe me, it's far more transformative. This right here, this is the pivot. The moment carbon becomes a hard cost, it triggers a chain reaction that travels all the way from the factory floor to the stock market. It stops being some abstract environmental metric and becomes a critical financial variable that you just can't ignore.
In this slide, it maps out that chain reaction perfectly. See, it all starts with simple data reporting at the border. That data then creates a cost, which eats into the product's profit margin. Lower margins, of course, affect the company's earnings, which in turn hits its overall valuation. And the final piece? Investors see this and they adjust their risk models. All of a sudden, a high-carbon factory isn't just a polluter, it's a risky asset.
So what happens when investors see a new kind of risk? Well, they don't protest, they don't lobby, they just quietly move their money somewhere else. And this is where CBAM becomes a kind of global capital allocator, rerouting investment away from those carbon-intensive assets and regions.
And this just brilliantly illustrates the new world map for investment. It's creating this great divide. On one side, you've got capital magnets. These are places with clean energy and transparent, auditable data. They get cheaper financing. But on the other side, you've got capital deserts, places with old, dirty grids and messy data. For them, the cost of capital skyrockets, or worse, the capital just disappears entirely.
This quote just says it all, doesn't it? There's no big public fight. The market just recalculates the risk, and the money flows to somewhere that feels safer and more predictable. It's this silent but absolutely relentless shift that reshapes entire economies without a single vote ever being cast.
So what does all this look like in the real world? Well, it means we're literally redrawing the industrial map. We're starting to see the emergence of new winners, regions that are becoming these hubs for future-proof manufacturing, and of course, new losers, who are at serious risk of being left behind.
And this creates a huge paradox, especially for emerging economies. I mean, many of them rely on older, carbon-intensive industries. To clean up their act, to modernize, they desperately need investment. They need capital. But here's the trap. CBAM, a policy that's designed to encourage decarbonization, actually makes those very locations look riskier to the investors who hold the capital they need for that transition. It's a classic capital squeeze, and it's happening at the worst possible time for them. So how do countries escape this trap? We're starting to see the rise of a whole new model, these carbon-ready industrial zones.
Think of them as ecosystems designed specifically for the CBAM era. They offer things like automated data, built-in verification, and super low compliance risk. For an investor, that's a dream come true. It's predictable, and capital absolutely loves predictability.
What all of this really means is that our very definition of what makes a manufacturer competitive is changing right before our eyes. The old rules are just out the window. Winning is no longer just about being the cheapest.
It's a really simple but profound shift. For decades, success meant one thing: having the lowest possible production cost. End of story. Now success means having regulatory resilience, the ability to prove that your carbon profile is clean, it's transparent, and it's defensible. The new competitive advantage isn't just about cost, it's about data credibility. It's about trust. So, if there's one thing to take away from all this, it's this. CBAM isn't really a trade policy. It's a capital regime. It's a powerful force that's going to dictate where the next generation of factories will be financed, what technologies get funded, and which economies are going to thrive in the decades to come. Its biggest impacts won't be in shipping manifests, they'll be on investment maps. And that really leaves us with a final thought to chew on. This isn't about killing global trade. It's about making it smarter. It is the end of an era where we could just ignore the environmental cost of our incredibly interconnected world. The future of manufacturing is still going to be global, but it's going to be built by those who can prove their story on carbon, on capital, and on data.